right, let's shift our focus from that because the financial world is abuzz with anticipation as investors await Fed Chair Jerome Powell's comments. In fact, at the annual Jackson Hole Economic Symposium, this year's theme is Labor Markets in Transition, Demographics, Macroeconomic Policy in Focus. Varun is here to break that down for us as well. Let's listen to him.
Well, so the Jackson Hole Symposium has started and it would end on the 23rd of August, and this year the theme is Labour Market in Transition, Demographics, Productivity and Macroeconomic Policy. Now all eyes would be on the speech of Jerome Powell, that is the Fed chairperson, and he would be speaking on the 22nd of August, that is Friday. This would be his 8th speech in Jackson Hole, because before this he has given 7 speeches, and by far this would be the last speech of Jerome Powell as Fed chairman in Jackson Hole, because next year in the month of May his term as the Fed chairman will actually end. And if you look at the economic data of US, the inflation data, the jobs data, the overall signals are very confusing. And also if you look at the FOMC minutes, there it has been said that the tariff effect may take longer to materialize, and also majority of Fed members view inflation as a bigger risk than employment. So all eyes would be on Fed chairman's speech, what he speaks on the overall rate cut for the September policy, because many are expecting a 25 basis rate cut, many are expecting that there would be no rate cut, because if you look at the money market, till last week they were expecting there were 90% chances that there would be a rate cut. Now the expectations have actually come down to around 73%. So this would be a precursor to the September policy, and all eyes would be on the speech of the Fed chairman Jerome Powell, and this would be his last speech, so the importance actually increases because of that as well.
All right, Varun, putting that into focus, but we'll also discuss the same at 9 p.m. tonight, so join us then as well. But let's also tell you that Chetan Iyer, Chief Asia Economist, Morgan Stanley, says that the Fed may not cut rates in September, and he also touches upon the health of the US labor market. Let's listen in.
If the chairman does indicate that the revision in jobs data point is a concern, it might sort of seal the expectation of a rate cut in September meeting. But it's possible that the chairman still indicates that unemployment rate is relatively low. And if you remember in the last press conference, chairman was very much focused on that number of unemployment rate. And that has not changed in the last sprint, despite the revision to the non-farm payroll. If the Fed cuts interest rates, at the same time, you have private sector balance sheets which are in a good shape. So if private sector growth comes back, and remember that the fiscal deficit is going to expand in 2026 because of the tax cuts that have been already announced. So a combination of strong demand from the government side, and at the same time, if the private demand picks up, that will be a concern for the bond market.